All right. Howdy, howdy, everyone. Get my screen set up here. One second. How is everyone doing today? Yeah, Susie, I didn't take the lows on Tesla this morning. I was a scaredy cat. I was being a scaredy cat. Plus, we had the exposure on Tesla with the credit spread that we sold with the Perfect Tesla members yesterday. So, kind of wanted to stay away from that. Plus, Tesla is one of those names that I can't really trade too well with my
umbrella service, so you can go ahead and cancel that other policy that you had. That way they don't try to.
Crap. Yeah. Can you cancel it, or do I have to cancel it?
It would have to be you if you.
Gonna go ahead and mute Lance until he's done with his thing. Yeah, Frank, the quantum names catching a bid this morning, INQ, QUBT. Yeah, they were going off this morning. Pre-market, that was.
For like 2 minutes. I just got to cancel something. Can you take it, Christian? I don't know if I'm
Yep,
on
I can. Yep. All right, guys. So today we're gonna keep it light and simple. Yesterday we told everybody about the briefing on Sunday at 7 p.m. And we were gonna stick with the same theme here. But today I kind of wanted to give you guys a little brief overview of what you'll see on Sunday. And we're gonna be looking at the tool today that we built for you. We finally got it up and running, and it is looking phenomenal. And I'm so excited to share it with everybody. It really is a cool little dashboard that we got going on. Um, and somebody emailed me about what Rodney said, um, talking about everything, but this is what Rodney was talking about, and this is the thing that Rodney was so excited about to show you guys on Sunday at 7. So we're going to get into a little bit of this Friday dashboard. So with this that we are able to sell bull put credit spreads on, and we have especially handpicked these tickers. These are the tickers that are the most liquid in the stock market and that have a high liquidity on the options chain, a higher volatility compared to other names. But without further ado, I kind of just want to show you guys around the new dashboard, and of course, the full briefing will be presented to you guys Sunday at 7 p.m. But in the meantime, I'm going to drop a link for you guys to sign up for that briefing. And please make sure that you sign up and let us know that you will be there because we want to make sure that we have the right room size and everything like that so we can host everybody Sunday at 7. Just give me 1 second. Let me find this link here. Garrett, I'm not sure. I'm not sure on that. That's Lance and I don't have any of the information on that. We have no say in that, so that is to be determined. Let me see if I can do something with my screen here. One second, let me find the sign up link for you guys so I can drop that in the chat. Make sure everybody gets signed up. There we are. All right. Here is the link to get signed up. Sorry guys, I'm trying to fix the resolution for you. Maybe if I make it a little bit bigger, you'll be able to see a little bit better. All right, how does it look now? Now that I changed it, is it a little bit better for everybody? But yeah, I wanted to go over a little bit of this dashboard and kind of show you guys around and show you guys what the team has been working on for us. So when we open the Friday profit play dashboard, you can see that it scans 206 stocks. So these 206 stocks are handpicked by Lance. These are the most liquid names, as I was telling you guys about. But it scans 206 stocks for us. And as you can see, if we look a little bit further to the right, 114 of those are bullish, and then 90 of them are above the $50 price target. And then we have an average market maker move to ATR ratio of 0.47. And I'll get into that in a little bit. But if we go a little bit further down, you can see all these stocks that are highlighted. And what that means, well, first, let me kind of explain what we use this dashboard for. If you guys are familiar with our Friday profit plays that we've been doing inside of Stonkamania for almost 2 months now, 4 or 5 weeks, 6 weeks. You guys will know about our Friday profit plays, and we've been doing these for about 2 months now. But we finally built a dashboard for everybody that you can use and find these plays on your own. And of course, the full briefing is going to be on Sunday. But getting into a little bit of the navigating the dashboard and stuff like that, give you guys a little sneak peek before Sunday. Yeah, so before Sunday, just wanted to give you guys a little sneak peek. But yeah, these stocks are stocks that give us the best chance to target $500 by Friday. So the whole premise behind our Friday profit plays is to get into these plays on Monday, Tuesday, even on Wednesday. And these are the stocks that give us the highest probability of collecting a $500 paycheck by Friday. Lance, if you want to take it away.
Yes. Perfect. Alrighty then. All right. Hello, boys and girls. So let's do a little education, if we may. A little in the lab, because this is happening a lot right now, and it's going to continue to happen a lot, especially with a lot of names reporting earnings. So let me show you. Old Christian was already showing y'all. And I actually just got developed or changed the where's the market maker move? Well, you showed them, but I'm actually getting the market maker move floor a little bit easier to read. But one thing that's really important right now, and I'll show you all a Google trade here in a second, but first I want to just show a little education a little bit. So let me know if you can see my screen.
Yep.
Okay, good. All right, where's my chat? Chat, where are you? Where did you go, my lovely dude? There we go. Okay. 21 messages. Is that Tesla? Yes. I know. The chart doesn't really matter though. Mark, I agree. Mark. And I'm all your feedback. I am doing it. I'm sending over to Publisher Nate, the greedy bastard, we'll call him. So what happens? It could be earnings or any really momentum stock. So Christian showed y'all a list of stocks, right? Because a lot of these stocks, I will be the first one to say, I cannot trade. I mean, I can, but I try not to trade because, quite frankly, you're going to need a big account to trade. For example, Etsy, Roku, BE, Net, Palo Alto. All these are very, very not only high dollar stocks, but very expensive options, right? Very expensive options, even Tesla. So if we look at Tesla, right, and we did a little bonus bull put credit spread trade in it, which, now is at max value, but we took 50% in it. But if you look, and this is really important, you might be saying, Lance, Tesla's up $8. Why didn't you not buy calls yesterday? Great question. If you look at the calls, they're down about 35%, right? They're down 50%, 37, 42%. And you're going to spend $1,000 plus because the market maker move was $27. It only moved $7. And when it was down, it was only down $17. You may say, Lance, why don't you buy puts? Well, the puts are down 60%. So this is what we call implied volatility crush. What this looks like is ahead of the earnings event, implied volatility is sky high. This is a study implied volatility down below. And then post implied volatility, you see how it decreases. Think of it this way. Ahead of earnings, always, and especially a lot of these big momentum stocks, there is the unknown factor. It's like you live in the house in Key West, you just bought it, hurricane season's coming up, your insurance premium is going to be sky high. Then after hurricane season, there's no more fear, so the premiums become cheaper. That's how implied volatility works. Tesla came out with earnings. The market didn't know what was going to happen. Now they came out. Volatility is super cheap, right? So by selling the options, so we sold Tesla all the way to $397, meaning the stock could have fell almost $35 and we still would have collected our max profit, right? We still would have collected our $50, no matter what. You do 10 contracts, it's $500. So you don't have to get directional, where if you bought calls, you lose money. You bought puts, you lose money. And we can do that with these stocks as long as they don't exceed the market maker floor. So for example, let's say we want to trade a stock like one that has earnings next week, like Google. Where was Google? It was just on here. Google, where are you, my love? There's Starbucks. I just did Google there it is, Google. Okay. So we have earnings October 28th. It's gonna tell us this, right? It's gonna tell us this. It's gonna tell us the earnings date. Then next week, so they have earnings Tuesday. What we're gonna do on the 27th, so October 27th, you want to write this down, you can. That's Monday. Since they have earnings October 28th. What we can do on Google is we can go to Google, and this is actually some option mispricing, which very, 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 very rare you're ever going to find this, so it's a special one. We're going to find option mispricing. Yeah, and they're recorded on YouTube. So it'll be on YouTube here in a little bit. So what we're going to find on Google, so they have earnings October 28th. Let's write that down. Okay. We're going to go to Google, and we're going to go down, and the market makers are expecting Google to move $18 on earnings. Higher or lower? That's the market maker floor. So you can see what happens if you want a visual. When a stock has earnings, volatility goes up, even if the shares are flat. Post earnings, volatility goes down. Volatility goes up, stock is relatively flat, it's going to go down. Volatility goes up, post earnings, it goes down. Volatility goes up, post earnings, no matter if the stock goes down, up, or sideways, always going to come down. So you want to sell option prices like a market maker. You want to sell volatility. If you're part of the 4 p.m. payout plan, you know when the VIX is higher, because the VIX is a measurement of SPX, we get more money, we get more cushion. With individual stocks that have high implied volatility, it equals more money, especially right now during earnings season. So if we go to Google, the market maker floor is $18. So if we take 254 minus $18, that gives us, calculator, math. Again, we're keeping this all basic, so you don't have to be a genius to do it. You know, I'm a college dropout about 10 times and finally graduated at 26. So we get protected all the way down to 236. Where's 236? This white line right here. 236, this white line. So what we can do Monday is we're going to go to our dashboard. We're going to look at Google, and it's going to pick us the option to sell and to buy, because we never want to be naked. We always want to do a credit spread. So we have high implied volatility. We want to trade like a market maker. We want to collect credit, and we want big credit. So we could go down to the options, and we could go $18 away from Google share price. That means we could go down to the 237.5 put, buy the 235 put, and we can make $50 plus. Let's just use $50. We can make more. Let's just say $50. So if we analyze the trade, look at this probability. We have an 84% probability that Google stays above 237.5. Plus, we're getting $50 per contract. So we do 10 contracts, it's $500. So we're actually protected to 237. Because we take 237.5 minus 50. So as long as Google doesn't fall to 237, we make 25%. Is that 20 or 25%? 25%, right? 25%. The probability in math says we have an 84% chance of winning. Now, if Google crashes down to 220, we lose $200. That's not bad. The probability of that happening is less than 16%. So for this trade, we should only technically, according to probability and math, we should only be getting around 20 cents. We should only be expecting technically about a 16% return. We're getting around a 25% return. 20 to 25% is what we're always going to aim for, just like the 4 p.m. payout plan. That is pretty crazy to think that we can make 20 to 25%. The probability of that happening is 84%, when we should be only getting about 16% return. Why? Because of the option mispricing in Google. And why do we have option mispricing in Google? Well, look at volatility, how high it is. It's sky high. And for a stock like Google to have option pricing this high, that's rare. I mean, we're higher than we were last earnings by about 4 points. And if you look at Google, what happened last quarter, it went up $6. And then later in the day, it went down. So it was up $2. What does this remind you of? Tesla. To the key. So Tesla, we're trading right where Tesla was 2 days ago. So all this earnings, where you had buyers and sellers, and CNBC talked about Tesla all yesterday and today, what actually happened? Who made money? Not the call buyers. They lost 30, 40, 50%. Not the put buyers. They lost 60%. But the market makers. The market makers made all the money. The option sellers, the premium sellers, the house, just like Vegas, where I lost, like, in the video, I lost like, I think $500, but I really lost a lot more. Just don't tell my girlfriend. But that's the way right now. It's stress-free. It's, I don't want to say easy, but you have a big cushion, and you don't have to be right on direction. And why do we not want to be right on direction? Look at the S&P. Look at the market. What has it done the past month? Absolutely nothing. Zilch. Every day it's up, down, up, down, up, down, up, down. So right now is again, I can't say easy, but it's the most stress-free way to trade right now. Because you can be wrong, still make money. You can be right, you make money, or the stock can do nothing and you still make money. And in my opinion, where the market feels like up, down, bullish, bearish, it's going to be very hard unless you were, day trading like we did earlier today in AMD and Dash. I mean, there's really nothing where you're going to have, unless you literally scalp the market, right? And you have to buy and then buy low, sell high, and then get out, because if not, stock goes down. It's very, very less stressful. I mean, the 4 p.m. payout plan has been really good too lately, because the market has been neutral, right? And a neutral strategy. The problem is, with the higher VIX, we get more money with the 4 p.m. payout plan. But I wanted to do individual stocks because a lot of these big stocks, Avgo, CRM, UPS, United Health, I just can't physically trade or send out trade alerts, because if I tell you to buy UNH next week options, you're going to be like, Lance, I don't have $1,300 to buy one lot. And I feel you. I'm right there with you. My Robinhood account's like $36,000. I don't want to go buy 10 contracts for $13,000 and put a third of my account at risk. That's crazy. That's insane. So instead, by doing credit spreads, trading like a market maker, you don't have to get super directional. And right now, I think that's the best thing to do, because nothing's really trending. I mean, the market's not trending at all. I mean, we've had to do buyout plays, like WBD, Peloton, gambling on little stocks, which is fun, but it's going to be difficult to swing trade when everything has earnings over these next couple of weeks. So let me know if that makes sense, gang. If it does, post yes in the chat. That's what I'll be talking about more in detail on Sunday. I wanted to get this out sooner. We started doing this back in, I think, May. We started developing and testing it. But kind of life got in the way. And recently, too, with volatility spiking and so many big names reporting, I think it's the perfect time to do it right now. Speaking of, what is the Micron doing from earlier? Oh, it's up. Oh, and another thing that you can do too. Oh, there goes Roku right back up too. So if you recall, Roku we looked at briefly Tuesday. The market maker floor was $93. Look exactly what happened when Roku got near 93. Really good support, huh? Got to 93.18 and then it went straight up. So it's really good too for individual stocks where you have the market maker levels, their support and resistance, to be fair as well. Google, yeah, but we're going to do Google though Monday, because we always want to do the day ahead of earnings. So if Google reports after the close, we want to do it that day, that afternoon. If they report, let's say Tuesday morning, we want to do Monday afternoon. So let me actually look really quick for you. Google is after the market closes. So we're going to want to do it Wednesday in the afternoon that day. Or Tuesday afternoon, if they report Wednesday. So you always want to do it one day ahead of the scheduled event. And then you always want to trade Monday or Tuesday as well, because Mondays and Tuesdays, you're going to get the most premium. So we used to have a word a phrase on the street. It was called Premium Burn Mondays. And if you're like, what does that mean? Premium Burn Mondays. So think of it this way. Monday, what happens? Everyone wants to jump back into the stock market. So what the market makers will do, let's just put up, I don't know, QQQ for a second. So what they'll do, this is perfectly. So what the market makers will do, let's just use a blank chart. I want everyone to just blank chart. So the blank chart of the NASDAQ. You can use the S&P, NASDAQ, doesn't matter. Here's where we opened. Here's where we closed. Here's where we are right now. So we would have a phrase. Everyone wants to jump in the market on Monday. So we call it Premium Burn Mondays. So what's always going to happen when everyone jumps in? The market's going to do the max pain. Nothing. Or go down. Because all those option buyers have time decay, or theta for the option group. So then Tuesday, we want to sell those options because the time decay starts to accelerate in the last 2 or 3 days. It amplifies like a snowball going down. So therefore, this time decay, when we sell volatility, we sell time, we sell theta, we want to sell the high option prices and have them decay. So that Friday, they expire worthless. And we collect all the money. So all this is just chop. So it makes swing trading hard because you're like, oh no, I bought calls. It's doing nothing. Oh, it's down. Now it's up. For example, let's look at the QQQ calls from earlier in the week. Just to give you an example. You do QQQ, you can do any stock, really. It doesn't matter. You can do any stock you want. Well, let's take a look at them, just so you can get an example. Let's say we did QQQ. We'll do this Friday expiration calls. And let's just do the 614s. They're $1.15. So if we plot those on a chart, here's how they moved. Monday, they opened up at $3. Tuesday, still around $3, a little higher, a little lower. Wednesday, $1 to 50 cents. Today, $1.14. So even though the QQQ is, oh, that's a bad line. Here's where they opened. Even though the QQQ this week is technically up, I don't know, about $2, right? It's up, yeah, about $3 actually. On the week, those call options are down over 50%. But the put options, and this is why we always want to sell puts, because selling puts are always going to have a premium, just like insurance hedging is always going to be more expensive, right? So we look at the same put options, and let's say we sell the 605 put. We look at those put options, and we would buy the 604 put. Look what happens to them. Monday, they open up around $5. Tuesday, they're about $2.50. Wednesday, they go up a little bit, and then right back down. So 76 cents. So if you sold them, let's say at, I don't know, let's just say $3 here, because we'll do the trade every Tuesday. And now there's 76 cents. You just made $2.24 in profit. Or if you just let them expire worthless, you're going to make a full $300 per contract. We'll do it as a credit spread, so maybe we'll get 25 cents. You do 20 contracts, it's $500. But you see how the house will always win by selling options? A majority of the time, you'll always win. Now, granted, if you did them Monday, if you bought them and you sold them perfectly here at $6, you had 1, 2, 3, 4, 5 minutes. So you had 25 minutes from $5 to $6 to make 20%. But you had to hold through a 50% drawdown. And if you didn't sell them, you had to hold through a, 70% drawdown? Because time wants to work on our side. We want time to work on our side, not against us. You know how you have to say, oh, stock has to move. Expiration's getting close. We want expiration to come close. We want that time to work in our favor. So if you're a fan of the 4 p.m. payout plan, very, very similar, just with individual stocks, specifically individual stocks that have higher implied volatility compared to what the market makers are expecting and compared to their historic range. So we want option mispricing, which we can find, especially right now during earnings. And we get to make money. Stock goes up, down, or even sideways. So pretty cool. Pretty cool. And very excited to, I know we shared it with Diamond Club members about an hour or two ago, but to really, really be able to find some great setups over these next few weeks, because a lot of these big names are just the options the market makers are not playing. Ever since Netflix reported and there was panic, the market makers are no longer playing in some of these big stocks. They really aren't. I mean, I can't tell you the last time I've seen Google with a near $19 expected move. That's insane. Facebook, $55. Like, they are not playing this season. Yes, and it'll be under the trade tab. No, because SPY trades, hundreds of millions of options a day. So, oh yeah, by the way, I got the team to take off MSTR and AppLovin, by the way. So MSTR and AppLovin should be taken off just because they're too big to trade. And, they trade hundreds of millions of options a day. So if you see $1 million in MSTR, whoop-de-doo, $1 million is nothing for that stock. So I did get them to take off the 2 names. Then why not do a call spread on the other side? You can, John. You can. You can do a call spread on the other side if you want. You can. But you're always going to get more money for selling a bull put credit spread than a call spread. You're always going to get more money selling a bull put credit spread than a call spread, though. Just a heads up. You always will. And IBM is another one also, too. A little secret, which we'll go into more detail probably next Monday. If a stock moves inside the market maker move, like Tesla did, IBM did as well, usually what happens is they bounce. So within the first, it used to be 15 minutes, now about 5 minutes, what you can do, if there's still a little volatility left, even if a stock gaps down on earnings and it gaps down under the market maker floor, you can actually go in the first 5 to 15 minutes of the day and sell bull put credit spreads in the stock as well. Because what usually happens here is when the first few minutes, you see how volatility is still kind of high and then it sinks throughout the day. So you can usually sell bull put credit spreads. If the stock bounces, great. If it goes sideways, great. Even if it goes down a little bit, that's great. So like an IBM, you could go stock, let's say at 270, you could go in today at IBM and sell, let's say the 265 put, 265, 262 and a half put, and that would have got you, look at that here, like $2, let's just say, and now it's worth 10 cents. It's pretty crazy, right? It was $2, now 10 cents. So that's why, too, selling bull put credit spreads, very, very, you're selling high implied volatility, you're selling insurance. And as long as there's no hurricane, you're going to make your full profit. And they can expire worthless on Friday, or you can buy them back. Like Tesla, we bought back at a quarter from 50 cents, 50%, and really no stress, no pain, no stress, nothing. All right. Do y'all want to look at any names for earnings or no? I don't know. Was there any earnings today, Christian?
Yeah, we had one.
Anything good, I should say?
What was that name that I gave you a little earlier? Hold on, let me look it up. INTC, Intel.
Oh, Intel. How much is Intel? 30 or 40, 37? So, yeah, I mean, it's not a huge implied move. What is it, $3? So it's under what, 10%? So like Intel, what you could do for Intel. You could go to Intel. We want to do a dollar wide. We can do $3, take $3 off the current share price. 37 minus 3, that equals what? 34.5. So the market maker floor is going to be 34.5. And you can't get a lot of money in Intel. I wonder why. I wonder if we do the 35, 34. It's not bad. I mean, it's not perfect, but it's not bad. I bet you because all the Trump news in Intel, they're probably pumping it. So like Intel, here's what you can do. If Intel moves less than $3 to the downside tomorrow, you go in the first 5 minutes of the day. You sell the 35 put, you buy the 34 put. You try to get around 20 to 25 cents. If Intel moves down $1, $2, or even like $2.90, that's going to be your trade. Or if you want to get super risky, you could do it today, right? You could sell the 35, 34 bull put credit spread. You collect about 22 cents, maybe try 25 cents. Let's say we could do 23 cents, just curious. And then you got to do 22 cents. And as long as Intel doesn't fall $2.54, you make your full 22%. Pretty simple. Ideally, we would want to go $3, but that's why Intel's not showing up on the list, because the market maker move is not exceeding the daily move. So do we have anything that is exceeding the market maker move for today? I know it's Thursday. We usually want to do these trades on Tuesday, so we're not going to find a lot of opportunities on Thursday. Usually want to do it for Tuesday. Or you want to place the trades on Tuesday. eBay's next week. Twilio's next week too. Those are going to be good. Next week's going to have all the good ones. Not this week because we don't have much. But even Intel, I mean, you have a decent cushion. You have $2.50 to make 25%. It's not bad. I mean, really, it's not too bad. So as long as Intel doesn't fall below 35, actually 34.78, you make 22% return for tomorrow. It's not bad at all. No, that's not bad at all. Google is next week. Yeah, Newmont. You can do Newmont too. Newmont, you can go about $4. So that'd be 85. You get about 18 cents. Wish you could get more. If you get about 20 cents for the 85, 84 bull put credit spread in Newmont, I would like that a little bit more. I don't think you're going to get 20. No, you're not going to get them. So ideally you want to do them on Tuesday. You'll get more money on Tuesday. Thursday, since there's only one more day left, you're not going to get the max amount of money. So Tuesday you're going to get the most money. And then Monday you don't have to worry about the volatility. So Tuesday you'll get the most bang for your money.
We also have Ford and Deckers for earnings.
Yeah, Deckers is illiquid.
Yeah.
Can't trade it. Yeah, I think Deckers. Yeah, Deckers is too illiquid. 6 by 650, 640 by 710, 510 by 5. Yeah, you can't trade Deckers. And then Ford's just too small. Too small of a stock. I traded Deckers though, and I remember I could not get filled. I had my order in all day to get filled in Deckers. This was a few weeks ago. It was really hard. But yeah, we only do the most liquid. 206 of the most liquid stocks. That means tight bid-ask spreads, nothing wide. We don't want to do wide stocks. By the way, they should probably take out TJ Maxx. I don't think TJ Maxx is liquid anymore. Yeah. Probably need to take out TJ Maxx. You can't trade that name. 5 contracts, 1 contract, 2 contracts. Yeah, we can't trade that. Only the most liquid stocks in the world. Not the illiquid stuff. It's like BE, Delta, Etsy, QT. NEE has been good too. That one's been real good. All right. Sweet. Christian, do you have anything else for the fine folks?
I do not. I think you did a good job explaining everything.
Yeah, I don't think I really have much either. I mean, I have literally like, besides some premium selling, that's all I really have right now. I'm pretty flat as a pancake. I don't want to ruin my 100% Robinhood double, my account. So I'm not slinging any like new positions. Did a nice trade in Dash today though. Dash was good for, what should I make? 195 bucks. That was good. In the option bit. Some Lily calls. That's not horrible. Oh, next week. They probably have earnings next week. And they do. So Lily could be one too. Are they liquid or not, Eli Lilly? They probably will be next week. And they'll tighten up next week. Yeah, they're liquid right now. So these Eli Lilly options will tighten up next week. Just not a lot of option volume. Wow. Yeah, dollar wide. Yeah. They'll tighten up next week. Because the more contracts will trade as the earnings become closer. Yeah. Oh, Lilly will move huge. Lilly is about a $50 implied move. It's going to move. But I would wait till next week. As long as it's not, when do they report? As long as it's not Monday, you could wait till next week. 10:30. Oh, day before Halloween, Thursday. Yeah, so you could wait next week for Lilly. You don't have to rush to get in that one. Stellantis. They bought Stellantis calls ahead of Ford earnings. Oh my. Stellantis, Jeep, Dodge, Chrysler, Ram. They bought 7,000 Stellantis calls? When did they report? When are you Stellantis? They don't even report earnings. Or they don't even tell you when they report because they're what are they? Italian? Right? I think they're Italian. They don't even have an earnings date listed? I don't know how they're not bankrupt. Let's look. 10:30. You could get some option mispricing here. If they do report next week, you could get some option mispricing in Stellantis. I mean, yeah, I guess you could. 10,000 calls, only 800 puts. They bought them at a quarter. I mean, if you could buy them at a quarter, I would do them. How much are they right now? 30? You can't buy them at a quarter, can you? No. If I was on a paper account, I could. But real account, you can't. Yeah, it'd be something if you could do that. If you could buy those Stellantis at a quarter, I don't mind them. I wouldn't pay more, though. I tried buying those Sabre calls from yesterday. They bought like 20,000 of them. Never could get filled. I tried at 35 this morning, no fill. 40 by 45. Unbelievable. I want to trade on a paper account. I can always get filled. All right. I think that's it. We'll share more details. Yeah, it says Stellantis is next week. So, hey, you know. Yeah, UPS showed up today too. UPS showed up today on the list. We'll look at that one next week. We'll look at that one next week, UPS. Where was it? It was just here. UPS, my love. Apple too. Wow. There was a little $1 million Microsoft call buyer. I think it was yesterday. Was it yesterday or today? Was it Microsoft yesterday or today? Today. No, yesterday. Yesterday. Yeah, yesterday afternoon. A little sneaky wrapped 1.5 million in Microsoft calls. I saw Josh Brown pump Netflix today. I wonder if he bought him at the conference. He did a little pump job there. I wish I would have stayed, gang. I really missed everyone in Vegas, but I had to come back, and I missed the whole conference because we had to get all this footage out and recorded because our producer has his honeymoon. So I did miss out on all the Vegas fun. Oh, what's the last video? Is this me or Rodney gambling? Let's see. Is this me or Rodney? So we got kicked out of the Bellagio, Caesars. Oh no, I want to see the new video. Christian, my new video doesn't come out till
Friday, tomorrow. You
how
have to wait
dumb
another day.
How dumb can these guys be? Really? Really? Wow. How much? I think I only lost like $500 on camera. It's a pretty big Irene bet. Wow. Kramer said sell Irene yesterday. So they're loading up on calls. Wow. Wow. Kramer said sell Irene yesterday. It's up 11% today with elite buyer. December 2026 is 65s. Wow. Talk about inverse Kramer. What do they pay? A quarter for him? Oh, you want to know if... Wow, 27 bucks. Well, I was right. Almost a quarter. Damn, Kramer literally came out yesterday and said, sell Irene, blah, 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 blah. And it's up 11% today. Wow. Inverse Kramer strikes again. Damn, I can't believe they said, look how dumb. I am a dumb dice roller. Damn, that's hilarious. How dumb can these guys be? Wow. I don't even know what to say. I can't show my girlfriend this stuff. No, I let them do whatever. But I do feel dumb. I mean, I did feel dumb in Vegas, I should say. We were playing war, for God's sake, which you have like no advantage. I was even playing the wheel. I was playing all the games with the lowest probability. Rodney was playing bubble craps, rolling sevens. Like he would roll 7 within the second hand. $100 in, 7, $100 gone. That was Rodney in bubble craps. I swear. He was the worst bubble crap player I've ever seen in my life. And he said he was the best. All right, anywho. All right, we'll see what Intel does tomorrow. We'll have more opportunities next week. But yeah, keep selling premium. If you want to do the Intel trade, you would sell a 35 put, buy the 34 put. As long as stock doesn't fall like $2.50, you make good on your money. But yeah, that's pretty much it. I think that's it. Any final questions before we wrap up here? Then I go say, why did you guys call me dumb? And they say, well, Lance, you lost a lot of money. No. Push the button. Yeah. No, it's I think our producer guy, so we had to film everything. We had to go to Vegas early. We had to go like 2 days early because he's like, I'm going on my honeymoon. Because I wanted to stay to the conference and be there. I know some of y'all were there. So we had to get everything done like I flew in Thursday, get done by Friday and send it to him. So he can edit and do all the footage. And I'm like, really? So I missed everything in Vegas. I did hit up the buffet though at Caesars. That was good. All right. Did you go to the Spearmint Rhino there in Las Vegas? Omar, what's the Spearmint Rhino? Never heard of it. Yeah, Irene is next year. Never heard of the Spearmint Rhino. But no, they kicked us out because you can't film at the Bellagio. You can't film at the Bellagio, Caesars. You can only, we're just filming on our phones too, nothing crazy. You can only film in the Fremont. CDZI is up 5.5% today. Are y'all still in that stock? I'm up 9.3% in that CDZI. I wonder if they're still holding the options. 600,000 in the November 5 calls. Yeah, there's still 9,000 in open interest. I think I tried buying them at like 20 or 30 cents. They bought them at $40, and they doubled that day. They traded up to 145. Wow. 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 Looks like they sold half of them. They sold about a third of them. 19,000 traded, 7,000 came out. Yeah, so they probably sold about a third of their position. They should have sold it here, but never going to be perfect. Oh yeah, a lot of you calls. A lot of you calls. I bought some stock in that one yesterday too. Call spreads did good. Yeah, they've been buying all this. Look at volatility in this stock. Look how high it is. Did y'all see how expensive like the 29 calls were? That's why I sold the calls yesterday. The 29 calls they bought at 115 yesterday. They traded up to like $2. They're $3. Wait, what? These calls did not triple. There's no way. Oh my God. Those calls tripled intraday. They bought them at 110 to 125. They tripled yesterday? What does UUU have upcoming? They have to have some earnings or something huge. Or like a 1030. Oh, so they have earnings next week. They're implying a $6.50 move. Wow. Look at the volatility spike. So this is what I mean, volatility. So the stock is down 3%, right? This is going to be a good one for next week. Stock is down 3% today. So you may be saying, Lance, the calls are going to be down. No. The out the money calls. So remember I just showed you volatility, how volatility is going up, right? So you can make money. The out the money calls are up 20, 25, 30, 200%. Probably mispriced here. So they're up 30% the calls, the out the money calls, with the stock down 3%. The puts are going to be up too. Why? Well, because stock is down and volatility went up. So the puts are up 30 to 40%. So this will be a perfect one come next week to sell premium on. I mean, you can sell the 1918. Oh my God. Really? Oh my God. Look at this. You can sell the 1918 bull put credit spread. You can't get 50 cents. What? You could get 50 cents for selling the 1918 bull put credit spread. You've got to be kidding me. You get almost 50 cents, maybe 45. I think I might have found some option mispricing there. For selling the next week 1918 bull put credit spread. Let's try 45. I think the first order, I might have found some option mispricing. That's insane. You're basically getting even money as long as the stock doesn't fall $3, $3.50. Maybe we should write that one down for next week. You. Oh, you know what? That will be a good one for next week. Wow. That's usually you get 50 cents or even money for selling an at the money bull put credit spread. So like you would do like a 22, 21. Usually you get around 50 cents. That's actually insane. Again, it's because volatility is sky high. So like that would be a perfect one to do next week. So you're basically protected to 1850. Wow. Volatility is very high in a lot of stocks right now. A lot of names. A lot of panic in the market. Probably because we saw the CNN fear greed index was panic. Yeah, fear, that's why. So market makers are not playing. Ideally next week. Ideally, you want to do it the day before earnings. That would be the best time. If you can't get out the option, can you exercise them on your own at your strike price? You can. I usually always either let them expire worthless or just buy them back. Yeah. I usually let them expire worthless or buy them back. So like I mean, the next week 1918 bull put credit spread. I mean, you could even do the 18.5. My camera there, I can't see. You can even do the 18.5, 17.5. If you could get around 40 cents, that'd be great too. See if you could get 40. I don't know if you can. You get 40 cents for that. I mean, this is insane. because volatility is so high. I mean, the stock was just down, 10% yesterday and then rallied. I mean, you can even do the 18.5, 17.5 bull put credit spread for 40 cents. Meaning as long as the stock doesn't fall below 18.5 or 18.10, 18.5 minus 40, I mean, you make $40. That's 40%. That's pretty insane.
Honorable mention.
That is pretty insane. Oh, they're speaking of Deckers, a little Decker put buyer. I am not that. For the very wealthy, the elite, little Decker put buyer. If you want to dabble, I think I will not, but I'm not going to dabble, but too expensive. Why wait? Because volatility will increase. And what happens? So what happens tomorrow or Monday if you gets a downgrade or does an offering and the shares fall to $20? That credit spread that you got 40 cents for might be 80 cents, right? So your trade is not busted, but now you don't have a big cushion. By doing it the day before earnings, you eliminate all the risks that can happen ahead of the earnings and isolate the earnings event. And you're going to get maximum price because volatility will continue to rise up until earnings. I mean, you could play around today, maybe make a note. Like I just did a one lot just so I remember to look at it next week. But ideally, you want to do it right before earnings because volatility is the highest and there's still things that can happen between now and the event. Like what if they do some, I don't know, the CEO steps down tomorrow, stock falls 20%, you're SOL, you know. Then again, if the stock goes up, great, you're going to make money, but volatility is still going to go up. So you still have the earnings. So ideally, you want to eliminate everything that can go wrong and isolate for the biggest volatility that you can get possible. And there's going to be a lot of names next week, so don't, please be patient. And we'll be having trainings next week too on the new profit play dashboard. And it's fixed, the spelling too, because it wasn't. All right. We heard y'all, by the way, on the complaints with the blurriness. And I just sent that over to the team as well. So we hear you. And I think, and I hope the corporate company, the Nathan and the tech people will fix it. But, I will fight for y'all as much as I can. That I will. So I will get working on that. I'll give them a jingle as soon as we hop off of here too. I'm already saying the messages. And Christian is too, by the way. Christian's even sending messages to
Yes, I am.
the bosses. So I just saw that on the side. So don't worry, we hear you. All right, I think that's it. I'll be back tomorrow, 1:30, same time. Lance Phelps is on YouTube. Is that me? Or is that an imposter? It's a good name, though. I like it.